And US consumer confidence reading paints a much weaker picture than it is suggested by spending data. This likely reflects the bifurcation story. Spending is being driven by a relatively small cohort of high-income households. On the other hand, middle and lower-income households are feeling more financial pressure and are more nervous about what the future holds. Consumer confidence in the US hit a new low in January. The data marked the lowest level since 2014, and this comes as American families continue to be concerned about inflation. Consumers are becoming increasingly wary of making large purchases. That was indicated by a 9.7-point drop in the Conference Board's Consumer Confidence Index from December to 84.5. So things are looking worse for households today than they were post the Liberation Day fallout and the pandemic. Still, Americans keep spending. It is fair to say that the relationship between sentiment and spending has broken down, with sentiment surrounding the economic outlook at levels historically consistent with static spending. However, real consumer spending expanded at 3.5% growth in the September quarter in 2025. The divergence likely reflects the narrative at the top 20% of households by income are driving the growth story. The bottom 60% are by income are trading water, and in the median household, which is going to be within that bottom 60%, that is reflected in the sentiment survey. This provides ongoing evidence of the K-shaped story of the US economy. The bottom 60% are worried about their jobs, worried about tariffs squeezing spending power. Meanwhile, the top 20% of households by income spend more on services, so are not impacted by tariffs to the same degree. They have a better sense of job security, and they hold 70% of household wealth. This bifurcation shows little signs of changing in the near term. One of the key metrics within the Consumer Confidence Report is how people see the jobs market. Only 23.9% of respondents think that jobs are plentiful, 20.8% think that jobs are hard to get, and the rest are unsure. This gives a net reading of 3.1%, which is the worst outcome since 2016 apart from the pandemic.